Hello, America. Self-employment tax is how you pay for Social Security and Medicare when you work for yourself. Unlike traditional employees, self-employed individuals handle this themselves. You need to track your income and expenses to calculate your tax liability. Keeping up with your tax obligations helps you avoid penalties and interest charges. Stay tuned as we break down the steps to calculate and pay your self-employment tax. So, how much are we talking about here? The current self-employment tax rate is 15.3%. 15.3% of your earnings goes to taxes. This 15.3% is split into two parts, 12.4% for Social Security and 2.9% for Medicare. It's a significant portion of your income. Now you might be thinking, John, that's a lot of money. And you'd be right, but hey, at least you're contributing to your future, right? Here's where things get a little more complicated. When it comes to taxes, understanding the various thresholds and additional taxes can be quite a challenge. But don't worry, we're here to break it down for you. There's an income threshold for Social Security tax. This means that only a portion of your income is subject to this tax, and it changes every year. In 2025, you'll only pay Social Security tax on the first $160,200 you earn. This limit is adjusted annually based on changes in the National Average Wage Index. There's also an additional Medicare tax of 0.9% if you earn over a certain amount. This tax was introduced as part of the Affordable Care Act to help fund Medicare. For single filers, that amount is $200,000. This means if your income exceeds this amount, you'll be paying that extra tax on the excess. For married couples filing jointly, it's $250,000. So, if you and your spouse have a combined income over this threshold, you'll be subject to the additional Medicare tax. If your income is high, you'll be contributing more to the system. It's important to plan ahead and understand these thresholds to avoid any surprises come tax season. Section 4. Deductions for self-employed individuals. Don't worry, folks, it's not all doom and gloom. There are some deductions available for self-employed individuals. You can deduct the employer equivalent portion of your self-employment tax. Basically, you get to deduct half of the self-employment tax you pay. This deduction helps reduce your overall tax burden. Plus, you can deduct your health insurance premiums too. That's right, you can write off the cost of staying healthy. Section 5. Who needs to pay self-employment tax? Now, you might be wondering, do I have to pay this self-employment tax? Well, if you're self-employed and make over $400 a year, then the answer is yes. That means freelancers, independent contractors, small business owners, and anyone else working for themselves. Even if you have a regular job and do some freelance work on the side, you still might owe self-employment tax on that extra income. It's important to be aware of your tax obligations. Section 6. Special rules for caregivers. There are some special rules for caregivers. If you provide care for someone else like a child or an elderly parent, you might be able to claim certain tax credits and deductions. These can help reduce your overall tax burden, including your self-employment tax. So if you're a caregiver, make sure to look into these options. Every bit helps. Section 7. Paying your self-employment tax. A step-by-step guide. Okay. So you've determined that you need to pay self-employment tax. Now what? It can feel overwhelming at first, but don't worry. We're here to break it down for you step by step. By the end of this guide, you'll have a clear understanding of what you need to do and when you need to do it. First things first, you'll need a Social Security number or an individual taxpayer identification number. This is crucial because it's how the IRS tracks your tax payments. If you don't have one, you'll need to apply for it as soon as possible. The process is straightforward, but it can take some time, so don't delay. Once you've got that sorted, you'll need to make estimated tax payments throughout the year. These payments are typically due quarterly, so it's important to mark your calendar with these deadlines. Missing a payment can result in penalties, so staying organized is key. You might want to set reminders on your phone or use a planner to keep track of these important dates. That means paying your self-employment tax in installments, just like you would with regular income tax. The IRS provides several methods for making these payments. You can pay online through the IRS website, which is quick and convenient. Alternatively, you can mail in your payment using a check or money order. If you prefer, you can even make a payment over the phone. Choose the method that works best for you. You can do this online, by mail, or even by phone. Each method has its own set of instructions, so be sure to follow them carefully to ensure your payment is processed correctly. If you're paying online, you'll need to create an account on the IRS website. If you're mailing your payment, make sure to send it to the correct address and include all necessary forms. And if you're paying by phone, have your bank account information ready. Just don't forget to pay on time, or you'll be hit with penalties and interest. The penalties can add up quickly, making your tax bill even higher. To avoid this, make sure to set aside money for your tax payments throughout the year. This way, you won't be caught off guard when it's time to make a payment. If you find yourself struggling to make a payment, contact the IRS as soon as possible to discuss your options. So, there you have it, folks. A crash course on self-employment tax. It might seem complicated, but it's not as scary as it sounds. With a little bit of planning and organization, you can stay on top of your tax obligations and avoid any unpleasant surprises. Remember, the key is to stay informed and proactive. Keep track of your income and expenses throughout the year, and don't wait until the last minute to start thinking about your taxes. The more prepared you are, the smoother the process will be. It might seem complicated, but it's not as scary as it sounds. If you ever feel unsure about something, don't hesitate to seek professional advice. There are many resources available to help you, from online guides to tax professionals who can provide personalized assistance. Just stay informed, plan ahead, and don't be afraid to ask for help if you need it. Whether it's a friend who's been through the process before or a professional tax advisor, getting a second opinion can provide valuable insights and peace of mind. And remember, knowledge is power. The more you know about your tax obligations, the better equipped you'll be to handle them. Take the time to educate yourself and stay up to date with any changes in tax laws that might affect you. That's all the time we have for tonight. See you next week. Until then, happy tax planning. Like and subscribe for more. Feel free to provide feedback and/or experiences in the comment section below. Have a great day. Article link is in the description box below.